Nobody likes to spend hours and hours staring at charts all day, especially because if you do that, you are more likely to overtrade or to force trades that aren't there. Now, I only come to the markets 3 times per day, and I make a decision in 1 minute if I'm taking a trade or not. And if I'm undecided after 1 minute, I walk away from the charts and I come back at the next opportunity. Now, this trading style works so much better for me, and I have noticed my results have been improving since trading this way. So let's jump into the markets and I'll show you exactly how I trade for 3 minutes per day. So this is exactly what my charts look like. We have the 4-hour chart on the left and the 5-minute on the right, and you can see the 3 pairs that I trade here. So this is usually what your trading view looks like, but I just have a split screen. So we can have the 4-hour on the left and the 5-minute on the right. The reason we want to do this is because we are trading on the 5-minute based on what the 4-hour is telling us. What I mean by that is we are looking for the momentum on the 4-hour, as it is more significant than the momentum on the 5-minute. And then we are looking for our entries on the 5-minute because we are intraday trading. Now, I come to the charts 3 times per day: 5:55 a.m, 9:55 a.m, and 1:55 p.m. The reason I do that is because there's 3 4-hour candles I trade per day. So you can see this candle here that says 6. This is the 6 until 10 a.m. candle. It opens at 6 and it closes at 10. The candle here that says 10 opens at 10 and closes at 2. And the candle here that says 14 opens at 2 p.m. and closes at 6 p.m. Now, this candle is the 2 a.m. till the 6 a.m. so it's the Asian session candle. So when I come to the charts at 5:55 a.m, I will be looking for buys. Now, the reason I'm looking for buys is the previous 4-hour candle has closed bullish, which means that there is likely to be bullish momentum in the markets. As for 4 hours, buyers have been pushing the price up. So I would be looking for price to continue upwards. It is as simple as the reason I think price is going to go up is because it has done previously. But if we want to get more technical about it, you can see here on the 4-hour chart that there is no significant levels that may mean price is likely to change. So what I mean by that is you can see here that this is a key level that price has pushed into previously. So when this 2 till 6 candle closes, I wouldn't necessarily be looking for buys, simply because I've seen what price has done previously, where you can see it has tapped into that area and immediately come down. So when price has been pushing again, I can see it's tapping into an area and is more likely to come down than if there was no level there. So with this candle, there is no recent levels of rejection. I'm only looking back a little bit. There's no point looking all the way back here because price is always going to come to some sort of level. I'm just looking for recent rejection, as that is the most relevant. Now you can see there is no recent rejection. So because of that, I will be looking for buys. So when I come to the market with 5 minutes before the 6 a.m. candle open, I will look at the previous close and I'll say, okay, I will be looking to buy this. Now, the way we execute our trades is we go to the 5-minute chart. And because we're buying, we are looking for a recent high to be broken. We would get to the markets at 5:55 and we would wait for a high to be broken. Now you can see on the 5-minute chart, this is pretty much immediately. So what happens is when the 6 till 10 candle opens, you can see that there, price did actually pull back and give us a tiny wick before immediately breaking the previous high. So price broke this area. Now all we'll be looking to do is to set our stop loss below the previous low. And that is what the trade would look like. And then the opposite is true for sells. So again, I would come to the market, 5:55. How is the previous candle closed? It's closed bearish. It's also had a nice wick rejection here. So price has tried to push up and push back down. So based on this close and the fact that there's no recent levels to worry about, we would be looking to sell when the 6 till 10 candle opens. So 6 a.m. open is here. We are waiting for a low to be broken because we're looking to sell. Stop loss above the previous high. And I like to aim for a 1 to 2. And that is exactly what the trade will look like. I like to say we are doing this for 3 candles a day: 6 a.m, 10 a.m, and 2 p.m. Now the way I'm deciding quickly is if I come to the charts and the market looks like this, I'm looking to sell, and I'll decide that within 1 minute. If I come to the charts and the previous 4-hour candle looks like this, I'm walking away because I'm undecided whether price is more likely to go up or down. Because we've got a doji candle, it's not a nice either bullish or bearish candle. We've not really got any wicks in one particular direction. We've got wicks in both. It's just a lot more confusing than if we would have had a close like this, and we just think price is more likely to continue up than it is to go down. So I literally decide in that 1 minute. If 1 minute goes by and I'm still undecided, I walk away, because at that point I'm more likely to be forcing trades. I need to look at a market and it needs to be speaking to me. Don't want to be forcing any trades, because that's when I'm more likely to make mistakes. Do I lose trades? Yeah, of course I do. I lose loads. But I've backtested this strategy over a long period of time, and I can see that it can be profitable in the long run. Now, do I miss trades from time to time because I've walked away within a minute? Yes, of course I do. However, it is nice to know that I'm in control of whether I want to take a trade or not, and I'm not forcing myself to take any trades. Plus the fact that, like I say, we've all got lives to live. We don't want to be sat in front of the charts all day, unless you are a scalp trader who likes to do that. And the way I take my trades is a set a buy stop or a sell stop. So if we're looking to sell, I would put the sell stop below the break of the low, and I wait to see what price does. It's either going to trigger me into the trade, or it's going to go against me and go above my stop loss. Now, if it goes above the stop loss, I'm just deleting the order. Now, there's times where price pushes right back. It may even go up to 50, 75% of the previous 4-hour candle before coming into our direction. But again, if it goes above my stop loss, for me, the trade out there is no longer valid. Plus the fact that I much prefer to see price push maybe against us a little bit, but then flip and continue into our direction. Because for me, that shows that there is still momentum in the market for whichever way we would prefer it to go. So whether it's bullish or bearish, we want to be on the right side of that momentum. So if price breaks above, we delete the pending order. If we get triggered into the trade, I double check the stop loss and the take profit to make sure they're definitely where they should be. And if they are, I walk away. Whatever happens, happens. Even if there's high impact news, I check the news beforehand, and if I'm happy to take that risk, then I still put the order in. Now, if for some reason we've been in a trade for hours and hours and hours and price is just moving sideways, potentially I'm looking to get out, because in my view the market has slowed down, the momentum has slowed down, and it's less likely to work out in our favor. But again, that's rare. I much prefer to just leave it, because like I say, we are all trying to live our lives. Being attached to the markets all the time isn't the best thing for me. And like I say, I am doing that 3 times a day. So it's such an easy way to trade for myself, because I'm coming to the market 5 minutes before each candle open, making the decision within 1 minute. I'm actually spending less than 3 minutes at the charts per day. Now, there is obviously things to consider in terms of risk management and those types of things, but I will be doing a whole separate video on my risk management strategy. So make sure you subscribe so you don't miss that upload. Any manual trades I take also is in the Discord group. The link is in the description if you'd like to join that. If you have any questions about the strategy or anything at all, just let me know in the comments. And thanks very much for watching.